Edward Stevenson with TimelessWall.net, and this will be part technical analysis, part day trading lesson on Federal National Mortgage Association, better known as Fannie Mae, stock ticker FNM. Prior to Wednesday's trading session, we learned that the company revealed they would be delisting their stock from the New York Stock Exchange, and instead the company would be quoted on the Over-the-Counter Bulletin Board. With that being said, we knew two things were abundant in this market. One, share price decline. Two, volume. Liquidity implied perfect opportunity for day trade, and that's exactly what we did. We completed 3 successful day trades, and we'll show you how we did that. We'll introduce you to the signals that drove us to buy and sell the security, and how we made money on the stock in general. So referencing the daily chart, just excuse these horizontal lines for a moment. All this is meant to show you is the fact that the price did decline. You can see that with the big red candle and the large volume, which was ideal for day traders. So here we are with the intraday chart. This summarizes the price action for Federal National Mortgage Association for Fannie Mae during Wednesday's trading session. These vertical lines represent our buy and sell signals, our first trade being from this point to this point, and we'll go more into detail afterwards. This point to this point, and our last one from here to here. The price opened up and declined immediately on large volumes, so both the characteristics that we were confident would be in this market after reading those news did appear. We saw stock bounce and break above this trending blue line, which represents the 10-period simple moving average. To us, this means a buy signal when the price breaks above it on strong volume. That means there's strength in the market and we should buy in. When it breaks below it, that's a sell signal, especially when it comes on above average volume, and that would be a bearish signal, meaning there's weakness in the market. So observing this first bounce, we knew that we couldn't solely rely on this 10-period simple moving average for buy and sell signals because the stock is quite volatile. At the same time, there's a lot of volume and uncertainty. So what we did was we actually analyzed the volume more so than the price trend. And what occurred was when we saw this large volume spike, we bought in at 52 cents per share. Confirmation came once the price broke above this blue trend line, but again we saw the volume decline, so the strength wasn't there, just as this period right here, and we held it all the way until it broke below this blue trend line at 56 cents per share. That's where we sold, although the market peaked at 58, creating resistance. So what we're going to do is just draw in a horizontal trend line now at 58 cents per share to represent this peak and resistance. Afterwards, we watched the market decline all the way down to 40.5 cents, I believe. Let's just make sure. Yeah, 40.5 cents. And we didn't touch this one because it didn't show any strength. It didn't show any sign of reversal up until this point. Of course, we missed it here, but then in this period where it broke below this 10-period simple moving average, we saw declining volume as opposed to growing volume, which was a good sign, meaning there's weakness on the pullback, and chances are we're going to see a bit of an uptrend intraday. And that's exactly what happened. If we use a trend line and connect the lows here, we can see an uptrend did form, and that's ideally what I was looking at. Of course, some sort of higher lows forming, which would imply an uptrend. In fact, we can also characterize this period with another trend line, a supporting one at the low here. You can see it rose and then fell back down and came back and tested this trend line, so we knew there was some strength in this market. We tried to get in early, but got in at 44 cents per share and held this one all the way through. You can see it's trended above this blue trend line for quite a while. The pullback here was a weak pullback because of the declining volume, and then we saw a lot of strength in this market as it broke above this once resisting mark at 55 cents per share, and we sold it at 56, given the fact that volume began declining as the price rose and tested 58 cents per share resistance once more, and of course that trend line dating back to this period here. And finally, our third trade came on very simple support analysis method. We took a look at where the price trended in this area for quite a while, and that was 52 cents per share. And so what I did here was I put in a bid at 52 cents per share, and I said, you know what, it's worth the gamble because we're seeing a decline on minimal volume, which means which is generally a bullish signal, as opposed to having a decline on growing volume. So chances are we're going to continue seeing this uptrend, and we are seeing higher lows, a low here, a higher one here, and now one here. So what ended up happening was we actually did find another intraday uptrend. We'll connect these lows here, and you can see I held it all the way through from 52 cents per share. That's where I got in, right around here on this candle. And I followed this 10-period simple moving average, seeing the fact that it would decline on slightly below average volume, and again grow on slightly below average volume. At the same time, we formed this intraday rising triangle pattern. You can see higher lows being formed, and then this resistance at 58. And I even made some comments online, if you follow us on Twitter, about the fact that 58 cents per share was posing rather critical resistance, and once the market would break above it, we'd see strong price action. The market did break above 58 cents per share at this point in time, right around 240, 250, and you can see there wasn't much strength behind that move. Volume picked up slightly, but nothing anywhere near resembling the volume in the earlier part of the trading session, so I knew this was a move on weakness. However, I had some stop losses in at these key supporting levels. Of course, buying in here, I was confident that if I give up some gains, it's still a good trade, given the likelihood of it continuing to uptrend. And of course, it did happen. We saw above average volume and a move on strength happen, and it did break above 58, came back and tested, and this time it held it and trended all the way to 63 cents per share. Of course, at this point, right around 60, 61 was where I said, okay, we have above average volume, but for some reason the next candle it's declining, and I knew that we'd probably consolidate and pull back. So I went ahead and pulled the sell trigger for about a 17% gain on this trade. This one here was a 27% move for me, and this one here, of course, being the smallest one, about a 7% gain. So collectively, I made about 50% day trading Fannie Mae on Wednesday, using very simple methods, very simple chart analysis, support, resistance, 10-period simple moving average buy and sell signals, and of course volume analysis. So this just shows you how you can make money online trading stocks, and especially day trading liquid stocks, whether they're in a bull or bear market. So once again, this was Edward Stevenson with TimelessWealth.net. I encourage everyone to visit our site, again, TimelessWealth.net, and tune into our resources. We have regular market commentary, all sorts of tools and educational materials for new and experienced investors and traders. We have regular stock picks via our free newsletter, which I encourage you to sign up for. And if you become a regular visitor to our site, I'm sure you'll find it quite informative and worth your time. So definitely worth checking out, TimelessWealth.net. Best part is that it's all free, and there's definitely something for everybody. Thank you for listening.